Good Wednesday morning, Market Chameleons and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Parkamanik. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the
Excellent.
disclaimer. I'm going to share my screen here. And if you are joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type that question into the live chat on YouTube. Will's watching it. He'll read it back to me. And to give you guys a chance to put those questions in, we'll start looking at the pre-market report, see if we could get some insights, what's going on in a pre-market hours, and then we'll move on to the questions. Okay. So
Perfect.
pre-market report, these are stocks trading in the pre-market hours. Up top, we have a calendar view. And in that calendar view, you can go back on a particular date, historical date, see what happened in a pre-market on that date. Today, we're December 20th over here, and this is what's going on so far from a high level. We got 364 stocks trading higher in the pre-market hours, 473 stocks trading lower. As far as volume goes, we got 130 million shares trading on up volume, 236 million on down volume. And if we convert that volume to dollar value, we have $900 million worth of stock trading higher versus $2.3 billion worth of stock trading lower. From that perspective, it looks like the trading in a pre-market so far is leaning towards the bearish side. But let's take a look at it from a couple more angles, and then we'll move on to the questions. All right. So let's come down here. And this next report, we see that we have a list of symbols. These are stock symbols trading in the pre-market hours. And we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. To make this list, the stocks do have to meet certain thresholds that we set because things in the pre-market hours tend to be very illiquid. Sometimes there's not that much trading. So we do have thresholds set to make this list. But let's take a look here. We got 38 stocks that made our biggest percentage gainers list, 55 on our biggest percentage decliners list. That also indicates that so far stocks that are trading in the pre-market hours leaning towards bearish sentiment. However, if we look at this list, you will see that we have small cap stocks on their ETFs, leverage products, any security that's listed on a major US exchange. If it's trading in the pre-market hours, meets our thresholds, it could make this list. And to narrow it down to a small group of stocks, we could use the filters here above. If you have a watch list, you could filter by your watch lists. We're going to use this one in our example, an ETF. When you click on it, you get a drop-down menu to select from. These are different ETFs. We'll select this one, SPY. And when you do that, which is the S&P 500 ETF, when you do that, the list below gets filtered by stocks that are holdings in that ETF. So these are the S&P 500 constituents, and we see here 3 stocks made our percentage gainers list, 5 on the decliners. So slightly bearish from that perspective as well. So that's so far, we looked at it from a couple different viewpoints, and the indications are that there's a little bit more bearish sentiment in the pre-market hours. I guess we gave it a couple minutes. Will, I think that at this point I could take some questions.
Yeah, we did have a question from Rob, and Rob, thanks as always for the question. He says, can Dimitri discuss the tabs on the new Delta block trade screener with a thought on how they relate to the deciding on a trade.
Yeah, so let's come up here on these option block trade screeners. And this new report here that we added is looking at, as you can see here, these are down here, we have a list of, large trades based on their deltas. Okay, so what this is looking for is option trades. So these will be single leg trades in here. These are either call or put. That's not part of a spread or tied to something. And it's looking at that trade and then calculating what would be the delta of this trade. And then determining, well, that would be a large delta, based on this particular stock, stocks, patterns, history, benchmarks. And it creates this, so you could see that there are a lot of them throughout the day. Options are fairly liquid in lots of stocks. We have lots of market makers, competition, specialists, different exchanges. And what it does is highlight those trades in here. So these aren't particularly any type of, trade ID or anything that to piggyback. It's to understand what's going on in that, what's going on in that stock, what's trading, what are the quantities, right? The quantity of the trade, the size of the trade, where, at what prices and implied volatilities are they trading, and what people may be doing. And that's part of the puzzle, right? That's part of the puzzle of understanding, the product that you trade. So when when you trade any particular product, whether it could be outside of it, let's just, just to kind of grasp this idea. If you're in the business of buying and selling a specific sneaker, right? Let's just say, some Nike sneaker, or you're in the business of buying and selling a watch, or you're in the business of buying and selling cars. Well, to be good at it, you have to understand that product. You have to understand the market. You have to understand what people are doing, right? What are the unusual? What are the trends? What are the benchmarks? Otherwise, you're at a big disadvantage if you don't know what's going on, right? And understanding the product that you trade is imperative. For example, when we were trading on the floor of the exchange, right? We were trading on the American Stock Exchange, CBOE, or whatever. Well, what is you have to lease a seat, right? You lease a seat and you make a payment. So you have to pay for that privilege because you're closer to the order flow and you have more information, because then you understand the players and what they're doing and how we're getting to the valuations that we're getting. So what this is doing, this particular screener, is, here's, whatever this is, BILI, this the top one. Let me see if they're in. So we could see here, we screened out 4 different trades in BILI that had, in this situation, high delta trades. And you could see here, got 900, 1,000, 800, 4,000 trades. And now, just looking at this, what can we learn? So what we're doing is bucketing the trades, right? So first we need to bucket them to understand them. These aren't the only trades, but how do we categorize and bucket them to understand them? And just here, this one alone, I see that, okay, 3 out of these 4 were December 22nd. So this is probably the front month options, right? This is probably the nearest term options. And I could just see here that these options are low priced. you know, and it might be somebody closing. I could check this today to see if the open interest increased or decreased. But this is all in the, this is all the same option, December 22nd, 12th. So all this is the same option. And then we see one going out in April, 4,000 contracts traded at 158. So at this point, when this traded, we don't know, if it was the positions were increasing or decreasing. We don't know if the open interest was going to increase or decrease. We'll know that today. We could check that right now, actually. And the other thing we could see is that once we open up the details, right here are the details of this trade. So you could see here that in this particular situation, is this 4,000 contracts traded in between the market. So now that's interesting information, because that even a sizable trade like this, right, with 4,000 contracts, 180,000 deltas, almost 179,000 deltas, 632,000 in notional, traded in a single block, right? So this wasn't broken up. This was a single block. Let me here, I'll show you the difference. Here, see this one, 925. So this one was aggregated, right? So this didn't trade in a single block. You could see here that it traded, many times, multiple times. It hit different exchanges, hit the bid. And that would be in contrast to here, where he was able to get this one big trade off. So he found the other side. So there's so that looks like a lot of liquidity, or there's another player, on the other side, right? This happened between, this transaction was between two different players, right? Because it's only one trade, unlike the other one, where many other players could have been involved on the other side. So that shows that there's fairly good amount of liquidity in this particular product, even in this particular option that goes out all the way out till April 19th, right? So this one's going out pretty far. It's not the from month. It's got some vega to it. It's got a bit decent delta to it. And then we could see where the implied volatility of it is. So here we see that the implied vol was 57. So couple things here, to make note. Now we have a benchmark for a couple things, right? We have a benchmark of the perceived fair value of where this traded, because now that this trade, there's a buyer and seller willing to transact in a large quantity at a particular price. So now we have this, implied volatility here, 57 volatility. We could see it's near at the money. So that's one thing. We also see that there's a big position now. Potentially, we'll check, right? We're going to check. We could go check this, but now we see that there's potentially a big position being held by a single entity somewhere, right? Because these didn't happen with many different trades. There's somebody's holding that position potentially, unless this went down. And we could check that probably. Let me take a look. I'm gonna go to the open interest right now, just to since I've been bringing it up. So it was on a 12, right over here. Let me just see the open interest. So it doesn't look. Hold on a second. Oh, here on the put. Sorry, it was the put. So it does not look like open interest change. Yeah, so that's I don't know what that is, I'll have to look that out because I would have expected it, but sometimes the OCC reports funky numbers. But here, either we're expecting it to go down or up, significantly because we have this one trade. There's no offsetting trade unless this got canceled somehow. So I'll take a look at that if there was like a cancel on that. But the idea there is that we're learning what we think is transacting, how things are transacting, what type of positions might be out there, what type of levels were they established, right? Because then you could start anticipating what are the next moves based on where implied vols go, stock or whatever. We could also take a look at this and say, well, did the specialists or the trade, did it start getting hedged right away as well? Because we got 100, almost 80,000 deltas, right? So if you wanted to just hedge the immediate directional risk, got about 180,000 shares of stock to buy or sell depending whatever side you're on. And we could see that within that minute, right? Within that minute, we see that you would that delta is 20 times larger than whatever all the volume in the stock in that 1 minute. So let's take a look at that. So this is at 12/21/07. So let's see if they started hedging it. Are they waiting on it? Are they, because then you got potentially this. Here we got to go back to yesterday because these were yesterday's trades. So my things are a little bit slow here. So what did I say? 12/21.
Yep.
We'll come back to it. All right. So this is where the trade happened, right? So this is the stock. And we could see here that let me see if those hedge right before. All right. So there's one burst for 50,000 shares, 12/13. Right. That's right now, and I believe so there's a 12/13 burst. I don't see anything else around there. All right, so 12/13 burst. So I don't see anything around it. So it's possible, that they're VWAPing this. Either they didn't hedge the delta, and then there's a side carrying that delta, right? Because if you're the only way you could either hedge it with other options or the stock to offset that delta, unless you happen to have a position that offset it. So if that didn't happen, then you're carrying that delta, and either you're like VWAPing it or you're just carrying that risk. So that's another thing to, in the back of our mind. Is there a delta position out there that somebody's sitting on? 180,000, because you could see there that even 180,000 would not be easy to get that amount of stock off in a very quick period, just judging by how we could see
Hey,
1
D,
minute to the next.
just to hear you say it, Rob's asking, so the hedge for one delta is one share of stock?
Yeah, so if you're exactly, it's how much stock you would have to buy or sell depending on the delta, buy or sell to hedge that directional risk. So for $1 move in the stock. So that's your initial hedge. And you could see here, these, to get off 180,000 would be very difficult because you you don't have that type of a liquidity, or that much trading going on in the stock itself. We do see it going up 20,000. Here's a 30,000, 46,000, but that's already at the end of the day when things, tend, when the volumes do tend to come in bigger, because you have strategies usually on both sides that are trying to go out flat. So a lot of strategies you'll see right up to the end of the day, they'll start trying to get out when there's more liquidity. But around that time, around 12 o'clock, it's a sizable, it's a big, you're taking on a big directional risk, because if you need to hedge it, you could see that from 1 minute to the next, there's not a lot of trading going on, right? It's not a lot of trading. So the impact to the stock could be big if you had to go and just, go to the market or try to hedge it really fast. That's what this kind of is indicating to us as well. So somebody took on, was willing to take on a sizable delta risk, big options trade, 632,000. You could see going out, further out in time. And then we could take a look at let me see the options chain. This was in April. All right. So the implied vol was there 57. All right, so over here towards, wait, it was in here, right here, 57, closer to the bid. Looks like somebody, even from this perspective, looks like somebody was trying to sell those options. And if you guys just look at the implied vols, how they're lining up, just these three, right? Just look at those three. You could see how the bid here, right, is on a relative basis, the implied volatility bid. You could see how it's pumped down, decreased, and how the implied vol of the ask IV is decreased, where indicating that there's probably a sell pressure on that option. All right, so is 57 vol good? What could they be looking at? And then we could compare it to historical loss, right? And the idea there is the following. We know that there was a big trade that happened. We believe that this was selling premium, at 57 vol. And if there's more, right, if there's more large options that are going to come in the sell side, it could start a trend of, implied vols coming in, right? That's what, I would start looking at and saying, well, if there's more, there's probably, a certain amount of inventory that, any specialist whatever is willing to hold before they start, decreasing their prices. But you can see your implied vols are in, across the board, basically over here. And this to me looks like there was a sizable sell. I'll see if the open interest, I have to check that why the OCC didn't. Sometimes the OCC delays things by a day. The OCC themselves with the open interest aren't like fully reliable, but we might have to wait till tomorrow to see if that open interest declined.
Hey, D?
Yeah.
Rob asked a question and Jim was nice enough to answer. So a covered call is fully hedged, correct? And Jim said fully hedged is when you have an equal delta. A covered call does not equal
Yeah, covered call, you have a delta, right? So covered call is different. It's you're you're just you're just you're selling the call and you're buying stock 1 for 1. So as far
Or
as
you've
the
already owned the
delta,
stock, right?
yeah, or you own the stock and you sell the call. So what it would, when you say buy fully hedged, well, yeah, if the market just climbs way up, then it, and you bought enough stock to cover everything on the way up. But a delta of an option is a continuous hedge. So you're re-hedging as things move, right? So there's no, you're hedging a delta, but as the stock moves, the options have a gamma and the deltas change. So you're
Yeah,
re-hedging the deltas as things change.
typically the people looking to sell a call or looking to buy right or looking to yield something against a stock they own, right? So typically they're picking a
Yeah.
lower delta, like a 30 delta or 20 delta, something above that, the monies to sell
Right.
and try to collect that yield, basically.
Right. Because a buy rate isn't even, it's not looking at the delta at all. It's just saying whatever, you don't care, you could sell 10 of these options or 10 of these options or 10 of these options. But all these options have a different delta. A buy rate is just saying whatever, number of contracts I sell, that's how many shares of stock I'll buy. But a delta for each option is different. You could see here, this option, if you sell 10 of these options, that's a 56 delta, right? This option over here, if you sell it, that's only an 18 delta. So against this option, you would buy less stock than for this option. So yeah, buy rate is something different. It's more of a, it's a strategy. Like, think of it as like you're just selling a synthetic put. That's what a buy rate is. All right.
So a
Well,
delta that is less than 1 requires less shares to hedge or more, Rob asks.
I mean, maybe I'm not understanding then your quote when it's less than. So the delta of the trade itself, it's looking at what is the delta of the option, right? So the delta of the option is a derived value from the option pricing model. And then that gets multiplied by the quantity of options that you traded, right? So if you trade 1, 2, 3, 4, 5, you're multiplying it by the quantity of options times 100 because there's 100 deliverable, right? So a 1 delta, right? Like this one, it's saying it's just like stock. So it's like if you know,
It's 1 for 1.
yeah, sell 1 contract, it's 100 shares of stock, right? This is a 56 delta. So you sell 1 contract, right? And you're buying 56 shares of stock. If you sell 10 contracts, you're buying 560 shares of stock, right? So the delta itself, think of it this way, it's the delta is the estimated sensitivity of this option to a dollar move in the stock, right? So if the option itself is expected to change by 56 cents up or down, right? That means, that's why you're only doing 56 times the quantity, because that's what you're trying for. That $1, you're trying to hedge off the move, the price change in that option.
All right. Perfect, Rob. I hope that helps. Thanks for all the questions. Thanks for helping out, Jim. Great job, buddy.
Yep. All right. Thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade in peace, chameleons. Everyone have a great day. Thanks, D.